earned. Because when you start working immediately, like maybe those who are at the age of 20, 21, you're already employed, how you'll be able to account for money that you earned when you're 21, when you get maybe to the age of that 40, is the money that you kept away in a disciplined way somewhere. So our policies ensure that there's discipline in savings. The other benefit is the investment. And Carol mentioned this when she called. She says that she wanted to know how you are able to invest your money in the money market unit and money market and unit. You wanted to know more about money market. Now, our products also offer that. You are able to do investment on the money market. So when you're giving us your money on a monthly basis, you're able to choose which counter you want your money to be invested on. We haven't got 3 counters. We haven't got the government bonds and bills. We haven't got the equity, that is the Nairobi Stock Exchange. And we also do a balanced fund where you can be able to choose a portion of your money is put in the government bonds, a portion of your money is put in the Nairobi Stock Exchange. And this we give you an upper hand to choose where your money, and if you don't understand how your money works, you let our fund managers manage for you your fund. The other thing that you also enjoy when you're investing with an insurance company, and in this case with Liberty, these products are also offering the critical illness in the event that you're saving with us, something happens, and then you're critically ill. We won't touch your savings, we won't touch your money. We'll give you a percentage, like 30% of the sum assured for your treatment for any critical illness. And along the way, you may lose your job. You're not able maybe to continue paying your premiums. What we do for you is we pay 6 months premiums up to when maybe you find your footing, or if you're not able to, you can come and reduce your premium, or we can find a way after 6 months of you losing a job. The other thing is also accidental cover. We normally cover accidents with our plans, so you are able to at least to have a peace of mind. Whatever you are doing, you are able to also get a cover on accident and other uncertainties. And they are also this product also is able to also give you an accident expense cover. So you are able to you are covered in the event that there's demise in the family, you or your spouse or the up to two children, you're covered for that. So generally, that's how our products work. Maybe Jackie, I've left something you could add.
No, and you've covered everything. Maybe you can be more okay. From my end, you've covered everything from the aspect of the money market angle, from the aspect of the critical illness, which as most insurance companies have not offered. Liberty Life is the only one that's offering this aspect as of now. In case of accident, we've also covered that, and in case of retrenchment. Caro has mentioned that the team here is between 17 and 30, and I'm sure most, if not all, are employed. So having an avenue that caters for in case of loss of job, in case of critical illness, in case of you want to invest in a money market aspect, this policy covers everything in that bracket. So, Anne, I believe you've done very well. You've not missed out on anything.
Okay, so Jackie, maybe Carol, back to you, and maybe if there's anyone who has a question on our presentation, they could ask, and then we can move on. Carol, over to you.
Okay, thank you. Yeah, I believe that was just an introduction, an overview of what you're going to learn.
Yes.
We still have more for us.
Yes.
Maybe if we'll be speaking, most of us are not employed, if I'm not wrong. Though some of us are. And we're trying to see, as much as we are not employed, we still have some savings. How will that money give us some interest? The procedure of getting into money market, like is there a specific amount to invest? Maybe you can educate us on all those. And I don't know if any other person has a question or what you want to know about money markets. If you have a question, you can unmute and ask.
Hi, Carlo. I have unmuted, not to ask a question, but to to say
Welcome.
I am now here. Thank you for your prayers. The lights have come back.
Thank you.
I'm trying to organize my gadgets, but at least I can now join. Looks like I've missed the entire presentation from Anne and Jackie, but I thank God they were available for me when I was in a breakout. So from the questions, maybe I'll get to catch up and know how much they have done. Thank you so much, Carlo.
Thank you, Margaret. Yeah, I don't know if any other person has a question. What you really want to know about money market?
Okay, I've got a question.
Yes, Jeff,
Yes,
go.
Could I ask?
Yes, go on.
I would like to ask, what is the minimum amount of money that one has to begin with? For example, most of us who are between the age bracket of roughly between 22 and 30. So is there a minimum amount of money that one has to start with? I think I've
Thank you,
finished.
Jeff. Okay, sorry.
All right, another question maybe from me.
Yes.
We're talking about money markets. I would wish us to maybe also get the difference between money markets and something like circles. What is the difference between money markets and circles? And then why money markets? Do we have types, or it is just one whole thing that is money markets? Or that is what I'm most interested in line with the other question. Thank you.
Thank you. Any other question?
I also have a question.
Yes, sir.
My question is, I'm not really sure if I understood you very well.
Yes.
But I want to know, is it to do with insurance? Because as far as I know, Liberty is an insurance company, right?
Yes.
Is it something to do with insurance? Because you talk about premiums, and in most cases, you look at the insurance company. It's very nice. Like if they come to talk to you, they'll really convince you, use all those sweet words to convince you. Then once you got into the hook, that's when things get to be very hard and difficult. So I really need you to categorically say, is it all about to do with savings, or is it about to do with insurance? Because you talked about insurance, you talk about covering life insurance, education, and so many other things. So please, may you just clarify on that? And then another thing, you talked about money markets, like government bonds and bills and equity and the Nairobi Stock Exchange market. How is the company, how is Liberty connected to these money markets? And what is the returns? What is the returns if someone invests in the money markets?
So I think, Carol, let me first of all take those questions so that I may not pile them up so much. And I'll start with the last. It says that, is it insurance, or because insurance comes to convince people, and then when things get bad, you are not going to be helped. Yes, insurance, Liberty Life Insurance, and we are here doing presentation for Liberty Life as an insurance. And I can tell you for free, if maybe you've had problems with any other insurance company, I've not had any with my clients in Liberty Life. We are able to settle out our claims and on time. And then you asked, how are we connected to the money market and all? This, when we take your money, when you're paying those premiums and you have chosen an investment plan. We take this money to invest in the stocks, in the government bonds. So that's how we get into the government bonds and the bills and the Nairobi Stock Exchange. That's where we invest your money, because sometimes, many times, you get young people like yourselves, you have not amassed enough money to get into Nairobi Stock Exchange alone, or get into into buying the government bonds and bills. So when you come, we collect all the small amounts of money that we are picking from so many people, then we invest in a huge way to get returns in those counters. I don't know whether I've answered your question. Can I call you Ouko? Because that's what I see in the name.
Yeah, so that's my name. There's the only part that is left is what is the returns?
Okay, our returns are usually between 8 to 12%. We normally peg our returns on, especially on the government bonds and bills, and over the years, the least that it has ever gone to is 8%. So that's why we peg our our return on your investment. Have I answered you?
Thank you for the response.
Okay, Sawa. Then someone else asked about what is the advantage of getting into a money market, and what is maybe the difference between money market and the circle. Both play a different role. You realize that when you're doing money market, you're doing you as an individual, as in you are not, it is not co-owned, it is you alone. But the circle, you realize that the circle is a group of people coming together and putting their money together to get maybe loans. So what I can say about the circle is that they're important because they normally take care mostly of the short-term goals. The other thing about the circle is that you didn't get guarantors within the circle. You can even borrow within your money. But the advantage of getting into a money market fund is you're able to control it yourself. You're able to know which counter you want to invest your money. But the circle, sometimes you have to leave it to be invested for you by the people that you choose. And many times, like in Kenya today, you've heard that sometimes the circle, the money is maybe poorly managed. You may even lose your investment. So I think it is good to balance. You are able to do the circle and to do the money market because of the advantages that they both offer and the risks also that are covered by them both. What I can say is mainly that the money market and insurance is mainly for conservation of your money, as opposed to circle where maybe you must be required to borrow so that at least you can be able to enjoy maximum benefits in the circle. Have I answered the question of the person asked about the circles and the money market?
Yes.
Jeff?
Yes.
Jeff?
Allow me, Anne, to add to what you have said, maybe to answer the person more, that vehicles of investment are many. The circle is one, the bank is one, and all those others that have come have been presented, they are many. And because I know I'm talking to believers like me on this platform, and I know, Carol, you can bear me witness, is that if you look at the word of God in Ecclesiastes chapter 11, from 1 all the way to 6, the wise man says, cast your bread upon the waters. And when you cast the bread upon the waters, because after a long time, you'll be able to find it. And he says, do it in 7. Then he says, do it in 8. When it comes to a person like you and I who wants to invest, all these are the various vehicles of investment, whereby you can place your funds and say, according to the wise man, they all serve different purposes. He says, well, you never know which one. So there are times the SACCO will come in handy, the bank will come in handy, the insurance will come in handy, the boards will come in handy, the pension will come in handy. So all these are focus of investment. It is called wealth distribution. And when you come with wealth distribution, the white man says you never know which one. Yeah? And therefore, SACCO will serve a different purpose, the insurance will serve a different purpose, the bank will serve a different purpose, and all those other investment, focus of investment will serve a different purpose. I thought I come in a general way and try and shed more light on the same. Over to you, Anne.
Yeah, I think Jeff and also, okay, Jackie?
There is another question on the messages. Can one invest directly in money market without being linked with an insurance company?
Yes, but as I said, is that you require an amount of a huge amount of money. Like you are required to have at least okay. The minimum for government boards right now is 100,000. So if you have that money and more, you can do that. You are able to invest. And the reason as to why we encourage maybe this from insurance is you are helped to get into those markets in a small way. Like you can do 5,000, 10,000. That's how you are able to. Jeff had also asked about the minimum amount for a 22-year-old to a 30-year-old. People who have started working. We normally encourage if you can at least put 10% of your income with this kind of investment because of the security that we offer, it is more advisable to do that. So 10% of your income, you can start more, you can start lower than that, but 10% really makes a lot of sense. Then I think Carol had asked about procedure of getting into the markets. The procedure is, okay, the filling of the forms and all, and then you decide the amount of money that you want to be putting aside on a monthly basis. Then we'll be able to guide you on how to go about it. So it's something that you can be helped to join. Have I answered all questions, Carol?
Yeah, yes, thank you. And maybe if I can just give a small direction. Okay, most of the people maybe don't understand about money markets. So you can just educate us, what is this money markets? Like how, let me say personally, how do I get to know about them? Should I visit any insurance company or should I visit the banks? How do I get to know about the money markets? And how do I get to know how much I can invest? And the different types of money markets, like the bonds, the Nairobi Stock Exchange. You can just give us a light on all those. Like, you can take us as if we are green about this and then educate us. Thank you.
Thank you, Carol. Maybe any other question before I can answer that?
Hello, everyone. I have a question.
Yes, Agnes.
So I'm asking, do Liberty Life Insurance, the fund managers in the company, do they offer consultancy services on which portfolio of investments we can invest in, or do we just invest in the insurance company and then the fund managers invest on our behalf as investors?
I think let me just answer that one, Agnes. The fund managers give you the prerogative to be able to choose. Would you want to choose, if you know about investment or if you know about the money market, they can give you the prerogative to choose. But if you don't know, you can allow them to choose it for you. So it is just upon you to decide what you want.
Sure, thanks.
Asante. So money market, what is money market? Money market is where you take your money for maybe people or government to use your money and then give you a return at the end of the period that maybe you've agreed with. When we talk about money market is simply like lending someone money, but at the end of the term to give you return. So it works like this, Carol. You give us your money. Maybe, for instance, maybe your premium per month is 5,000. So when you're giving us 5,000, and then you're picking and some more money from Jeff, you're picking some more money from Kevin, you're picking some more money from Ouko, Agnes. So this money, we put it in an account somewhere. We go and purchase maybe shares in a certain company like Kengen. So Kengen, they use our money. So when they're declaring a dividend, or whenever they declare a dividend on an annual basis, they pay us our money and plus whatever it has accrued. So that is, I don't know whether I'm very clear. Margaret, am I clear on what I'm saying?
Yes, you're clear, Anne.
Yes. So that is, we do trade with your money. We help you to go to the market for trading with your money, and then the return that you get, then we put it into your account. So when you come to take your money, you're not taking the amount of money that you've put with us only, you're getting some interest on it. So that is what money market is called. Caro, I want your thoughts on this. Maybe have I answered you clearly? Are you able to understand what money market is?
Yes, I believe all of us are able to understand what money market is. Personally, I've understood.
Okay, and you also asked maybe can you approach? Okay, you can. A majority of insurance companies are doing the same. They are selling what you call unit-linked products, so that they're able to guide you on that. I'm not sure about banks, but I know a majority of insurance companies are doing the same. Any other question, Margaret?
So
I need a
maybe.
Yes, Jeff.
Okay, so what's in the So basically, what we're saying, money market is a scheme whereby people who have money but do not have what to do, or the ideas in which to use the money, invest the money in other people who have ideas, or companies who have ideas on how to use that money, and then get returns, share the returns. That is what you mean.
Very right. Very right. That is now an idea of like money, your money working for you. Very right.
Thank you.
Yeah. Okay.
Excuse me. I have this question. Yeah.
Yes.
Yeah. Maybe could you shed light more on the difference maybe between the Nairobi Security Exchange and Treasury bonds?
Yes.
Yeah, there is something I need to understand from there. And, maybe even from your insurance company, how maybe for the money that maybe will be contributing monthly, after how, maybe after which period do you maybe share out the dividends maybe that you have garnered from the investment that you have made?
Thank you, Kevin. Yeah, the difference between the Nairobi Stock Exchange, that is the equity, and the government bonds and bills. The government bonds and bills are regulated by the Central Bank of Kenya. That is the work of the government. But when you come to Nairobi Stock Exchange, are privately owned companies that trade there. They sell their shares there. Like you get maybe Equity Bank, Barclays Bank. They are trading their shares there. So that is privately owned companies. They are not in government. They are non-governmental or partly owned by the government. They are not wholly owned by the government. Have I answered your question, Kelvin?
Yes, and maybe from the company now, the insurance company.
Yes.
So how long does it take maybe for somebody maybe to earn that particular interest, maybe depending on the premium that maybe an individual has contributed? How long does it take to earn that interest?
To earn that interest. Okay. Usually your interest is put into your account on on an annual basis. Every anniversary, an interest is declared, it is put into your account. But you can start accessing your money 5 years down the line because our products are long term. So 5 years down the line, sorry, rates are a bit going on and off. So 5 years down the line, you can be able to start accessing your money.
Okay, thank you. I've gotten.
Okay.
Maybe to add.
Yes, Agnes.
I'd
Maggie.
like to ask this.
Yes, Agnes, go on.
Like, let's say, because the market is dynamic and you say that you give an 8 to 12% returns, what if you invest in, you put my money in an investment that didn't bring the exact return you expected because the market is dynamic? How safe is my investment with you?
Okay. How is your investment secure with us? When I was giving between the interest of 8 to 12%, I said the worst that it has ever gone to, especially the government bonds and bills, and that's where we mainly invest, is 8%. It has never, and it's very secure, so it has never gone beyond that. And we work around the corner to ensure that your money, you do not lose your capital. Okay, out of experience.
Sorry. So what you're saying is that the 8% is guaranteed, or the rest are subject to market fluctuations.
Yeah, thank you, Maggie, for that. Agnes, have we answered your question?
Yeah, it's okay.
And maybe you could check also the messages, but I think you've answered Gerald's question on if you invest with
Jackie, go on.
Sorry, if you invest with Liberty vis-a-vis a broker, I think you've answered that question, that the money is guaranteed. And also Margaret has answered the aspect of the 8% to 12%. But maybe you could check the messages.
Just check Jackie and read them out.
I have a question.
Sorry.
Yeah. Before then, Dennis has a question. Yes, Dennis, go on.
Okay, I'm just trying to imagine when you use this money that I've deposited with you, for example, in shares of Kenji, and at the end of the year, they'll give you a percentage of dividends. At the same time, there's usually some government taxation on that dividends. So you people will get a net of that. And then now when I'll be accessing my money 5 years down the line, will I be again subjected to another government taxation on what I had invested with you, or now you no longer, the government no longer takes tax from what I had invested with you?
Thank you, Dennis, for that question, and thank you so much also for bringing the issue of taxation. Yeah, once the government has done the taxation from the investment, they don't do it again. The other thing, maybe I'd also forgotten to mention is, once you get into our plans, policies, or even our investment plans, you also get to enjoy 15% tax relief. So if you're paying 5,000, you'll be relieved 15% of that 5,000. That is about 750. So in essence, you're making an investment of about 5,000, but in lieu sense, you're paying 4,000. Is it 250? 4,250. So even on the issue of taxation with insurance, you somehow conserve your tax. At least you're not penalized so much. And how this is done is through the payee, the money that is deducted on your salary as payee reduces by 15% of the money that you're paying with insurance. Am I clear, Dennis?
Yes, you are clear. And now since I'm saving and you you are investing it with another company, is it also possible that when I've saved, you can also give me an overdraft or a loan equal to maybe twice or 3 times what I had saved? Or it's only that I save and you invest? There is no way that I save and you give me a loan out of it.
Yeah, then we normally have what you call policy loans, which you can be able to start enjoying on the second year, but we normally don't do like the SAC where they give you maybe twice or thrice your savings. We normally give you whatever your policy is as accrued, 90% of what your policy has accrued. Like now that investment value is what we normally give you, 90% of it, because you have to remain with 10% in the event that maybe you are not able, you have defaulted on your premiums for one reason or the other. We can use whatever has been accrued to pay for your premiums. So we give you the loan, yes, but 90% of your interest.
Okay, thank you. What if I've saved for like 1 or 2 years and then I get another better alternative for saving? Let's say just there may come a scheme that gives even 30% return per year. So I want to take out my money. In that case, is it allowed, or if it's allowed, there may be repercussions that I will not get the interest?
Okay, what happens is if you want to exit early, and early we are saying that is after 2 years, is when you're able to get what we call a surrender value. You lose some of your money because you've not kept your you have not kept your promise to stay with us maybe for 5 years and above. So you lose something small from the second year is when you're able to withdraw.
Something small,
please
could you
clarify
clarify in terms of that something small that you lose? Is it like 1% or 2% of what you had said? Just be clear.
Okay, usually from the second year, first year you don't get to get anything, but we are coming up with ways of ensuring that even when you exit early, you are able to get some of your fund. But from the second year, you currently, whatever the products that we have, you get 50% of your account value. When you talk about your account value is your money plus whatever it has been accruing. Then on the third year, usually 75, fourth year 85, fifth year you get 100%. Even if you said you stay with us for 15 years, from the fifth year we give you 100% of your account. Is it clear, Dennis?
It's clear, thank you.
Karibu.
I think Jeff Omaya had a question.
Jeff, karibu.
No, I just wanted your clarification here, how much I may lose if I opt to surrender maybe hapo katikati, and I think that is what I responded to.
Yeah, the other thing maybe I would encourage you to do, if you get to the second year and maybe you've gotten another place maybe to invest your money, instead of removing your money and losing your money, you can stop paying premiums. You stop them like nicely, as in you come to the company and explain that you want to stop paying your premiums. We will normally take your funds to an investment, and we call this kind of an action reduced paid up. When we talk about reduced paid up, is like you have done your 2 years, we calculate whatever sum assured you've bought with that amount, then we wait up to the fifth year to come and remove your money. There you can't lose your money even if you had paid for only 2 or even 1 year. But when you want to exit with your money is when now you lose your fund. So my advice is you stop maybe at on the second year or even on the first year, but come for your money after 5 years. There you won't lose even a coin.
Why one would want to also exit with their money, because that is the same money they want to invest elsewhere.
Okay. For me, I would also look at not even losing money in the name of going to invest it anywhere, but we all have our different choices to make. For me, I would prefer not to lose a coin because the money is very hard to come by. So with these options, at least it's also good to weigh at that particular point. Yeah, maybe Margaret, you can. Have I been able to cover everything, Maggie?
Yes, I think Annie have, but I just want to make it more clear, maybe to Jeff and all others who are silently having the same question, that when you're coming on board to do money market or to do long-term investment, you must be having goals, future goals in mind. And goals are either short-term or long-term, or there's that we should have. And what happens, the kind of plan and Jackie is presenting, is that it gives you that discipline to set aside money for that long-term goal or that short-term goal. So when Jeff, you want to come and you want to interfere with the FAD before time, is it that it is meeting your goal, or is it just an interruption, and is it necessary? I just want to shed more light on that one. And therefore, when it comes to your plans, the products that Anne is presenting gives you that discipline. It gives you that discipline to make sure that in 1 year's time you have this money saved. In 5 years' time, this money saved. You must be having a goal as to why you are going into that kind of investment. And when you're going into it, then you must be knowing that we are just fund managers, and the moment we get your money, we also enter into a contract with the person who is doing the investment. And we are saying in 5 years' time, we are not coming for this money. So should you come and interrupt it, then there is that kind of, a penalty, and it might not serve your purposes or our purposes. So that's what we are saying, that when you're coming on board, know that this plan is giving you a disciplined way of setting aside money for tomorrow, setting aside money for a future goal. And once it's interrupted, then you're also interfering. But if you are consistent, what is usually hard to accumulate is that lump sum. But should you have the discipline and you have the lump sum accumulated, you realize that you're able to do much, much more other than when you just come and you are interfering with the flow. I want to give an example. Like, for instance, you have a bank account, and that is where you put your money every now and then. If I come and have an issue, I'll come and tell you I have a problem. And because you are human as I'm human, you'll actually go to the bank account and you withdraw that money for me. And when you do that, you have already interfered with a long-term goal, or a goal that you have set for yourself for 1 year to accumulate and have a fund already set aside for a goal that you have in mind. But when you put this money and you know that 5 years down the line you cannot interfere with it, it will help you in your planning. And I just thought I shed more light in whatever we do. And that's why I say that few costs of investment are many. And you never know which one you'll be needing at whatever time. Let me give an example for Carol. Carol, in maybe like 5 years down the line, you want to have a wedding. You can actually go towards that and come to anyone for funds because you have accumulated that fund. I don't know whether you're getting it. So use your young age to plan your life well and make it more stress-free as long as you are living. I don't know whether I'm confusing you more or I'm shedding light on something that Anne has presented.
You've helped so much. Maybe before Anne, you proceed also Apo too. The question that was also asked Pale, allow me also read the question, alafu I also connect it with maybe some other two concerns that I also have here. The question is regarding, I think this is regarding a liberty, that as the insurance company invested on tangible assets and liquid assets to guarantee one investment, especially on life products. That is one question that was asked. Nimeisoma kutoka pale kwa hiyo messages, so maybe you can also be thinking of that. I also want to raise two other concerns. There is nothing that doesn't have demerits or disadvantages. So what are the likely disadvantages of money markets generally, so that we also beware of them, even as we consider venturing into them. My other question is, I also wish us to get a case scenario. Give us a case scenario of, let's assume I have 10,000 shillings. Which is the most appropriate plan that I can adapt? Maybe being of minimal earnings. Assume also 10K, but I also have some 10,000 I want to invest, and maybe get something out of that amount maybe at the end of 5 years. What is the formula? Is it the simple mathematical simple interest formula or compound interest? What is the formula, so that other 6 we can also do the calculation? I know that this is what I expect, even before I come for the advice from the company or from banks or wherever they be. Thank you.
Yeah, thank you so much, Jeff. You asked about investment. Do we have maybe any tangible assets, or how are we doing our investment? We realize that our policies, when we invest, it's mainly with us in assets. It really may not, you may not be able to sell an asset in the event that maybe a client or even a shareholder wants to liquidate. So mainly we are investing with offshore and the money market that we talked about, the government bonds and bills, and the Nairobi Stock Exchange, just for liquidity, though we've tried also to do assets, but not that much. The disadvantages of maybe investing in a money market is that your money that you're earning on a monthly basis, you've been enjoying all your money. Like now, if you're earning 10,000, you've been able to maybe live comfortably on your 10,000, and now we are here asking you to part maybe with some amount of money. There's pain. There's some pain in putting money aside. Something that maybe you don't know whether you'll be able to. There's so much uncertainty. Maybe you're giving your 2,000 every month, and you don't know whether it will come back to you. There's that discomfort. That is the disadvantage that maybe our products have, and just that the putting aside of that amount, it is very painful. But we normally say no pain, no gain. The other thing you talked about is if you have maybe 10,000 you want to put aside, and the returns maybe that you advise on. For me, is put aside money that you're comfortable with. That's why I said our guideline is at least you put 10%. Because when you look at insurance generally, it's not about investing so much and getting so much returns, like what we are promised in the what do you call them, the pyramid schemes and all. Insurance is not like that. Insurance is just here to help you in very soft way to at least get yourself some amount of money where you are hiding your money somewhere, where there's security, where there's the discipline in saving, where there's the investment aspect. And you don't have to kill yourself when you're doing this. You have to do it as comfortably as possible. That's why I talked about the percentage of 10%. Because insurance is not, it's not like you're making money there. You want your money to accumulate faster. I know young people, that's what they want, to get money faster, to get the returns faster. But you really have to, you have to be very, very patient when it comes to investing with insurance. It's not just a money-making venture. Jeff, am I clear?
Thank you. But I think still there is a part. I just want a case scenario so that at least we can have a picture in mind. We talked about 5 years as maybe the minimum time that we need to also do this. So maybe there's definitely a formula. I know the interest rate vary from time to time. Let's work with the minimum 8% that you said. So maybe step by step, tell us how we can calculate that. At least I have an idea. This is the amount I expect after 5 years if I invest maybe amount Y.
Okay, now so I think I got your question now. Yeah, Usually our rates are compound, it's compound interest. Every year it is compounded, and maybe you can just give me a few minutes to be able to demonstrate that to you. 1 minute as my gadget opens, I'll be able to do that, at least to tell you the amount of money that you are expecting at the end of the term. Just a minute. And maybe before I do this, someone else could be asking a question.
Okay, thank you. And maybe Jackie can help us go through the questions on the chat box. There's some folks who have asked some questions in the chat box.
Jackie?
Okay.
Jackie can help us go through the chat.
Okay, thanks, Carol. I was also trying to help Anne in the, I don't know, Anne, if you wanted me to share a rate.
Yes.
Did you want me to share the livest?
Yeah. Yes.
That's what you want.
Yeah, for 10,000. Yes.
For 10,000. Maybe Jeff can tell us. Okay, I can assume 22 is the age.
Okay. Let's work with 25 for now.
25.
Yeah.
So I'll do the equity fund.
Yes.
As a beginning.
Yes.
And I think I'll share it. I don't know. You let me know if you can see the same. Let me know if you can see my screen.
Not yet, Jackie.
So can you see the screen?
Yes, now we can see.
Is this what you wanted, Anne?
Yes. This is what I was wanted. Okay. You can scroll up, down, sorry. Up to the 5th year, maybe.
5th year is here.
Yes, I've seen.
Okay, I can't highlight it because it's sharing.
Okay, so no problem. So
maybe just have a look.
So,
do I enlarge it?
Yes, you can see.
Yes, I'm having a look.
Yeah, so
which column are we looking at?
We are looking at cumulative annual premium, then opening balance and the closing balance.
Can I just ask a question for you?
Yes,
beginning.
Can you see the screen?
No,
Yeah,
now we can't see again. So yeah, now we can see it. Yes, Elizabeth, go on.
So I was asking, what is the average premium that you pay for this investment? I don't know if you mentioned it, but I wasn't here when the meeting began.
Yeah, Elizabeth, what we said is that at least if you're putting 10% of your income, if you're comfortable with that, 10%, you can start even smaller or even higher, but 10% is what is recommended.
Oh, so it doesn't have, so it can come with 1,000 or 5,000.
Okay, usually we have an average income, maybe our average income, our minimum is 2,500 for this.
Oh, okay. Okay, thank you.
Okay,
And maybe to add on to Elizabeth's question, the 2,500, are you paying it monthly, weekly, or not basis?
It's monthly. Our premiums are monthly. Yeah, so it's payable monthly.
Maybe hapo kwa monthly. Yes, we've talked of 2,500 being paid monthly.
Yes.
And we're talking about this money being an investment at the same time, right?
Yes.
So at the end of these 5 years, it is the whole cumulative amount of 2,500 all through up to the 5th year earning me interest, or how exactly? Because you see, if I've been paying 2,500 the last month, that will only have had interest for 1 month. How does it work?
Yeah, well, what you're saying, Jeff, our interest is on annual basis. So, for instance, maybe if you're paying 2,500, that is 30,000 that year. So we declare an interest on 30,000. Then we declare an interest on that 1,000. So the following year, your money will be 60,000 plus whatever it has accrued in the year 1 and the year 2. So we declare an interest on that cumulative account. Your money plus whatever interest is, yeah.
Okay, that is clear. That is very clear.
Okay.
Okay, my name is Sam.
Yes, Sam.
Yeah, I was asking, you said there are risks which are involved in this investment.
Mm-hmm.
Now, what's the worst case scenario of the risk which is involved?
Okay, for me, the risks that are involved is in the event maybe that you are not able to continue paying due to one thing or the other, you may lose your funds. So if you abandon your policy midway, you will not be able to get your money back, especially if you have not cleared at least a year. Or sometimes you even clear 2-3 years and then you go under. You are not telling people where you have gone to, you've just disappeared. People lose their money and the people come claiming that insurance got lost with their money. But mainly it is because when things are not working on your end, you just keep quiet, you withdraw, there's no communication, so you lose your money.
Oh, I have understood. So when I be consistent on removing my 10% of my monthly income, so I'm assured that at the end of those 5 years that I'll get that interest.
Yes.
Yeah.
Yes. That interest and the event maybe that you're involved in any of the things that I mentioned there before, you're covered.
Okay. Yeah, thank you.
Okay.
And I think maybe you touch on the inflation rate because I know as a company we normally factor in inflation because someone has asked it whether inflation will factor in the investment that they make.
Yeah, we are able to guide on inflation because you realize that when you begin working, you start at a certain amount of. So we as financial advisors, every year we are able to guide on how you can continue increasing on your investment, at least to beat inflation. So when you start with 2.5, yeah, Jeff, you're employed today. Maybe you're earning your 50,000, your 100,000, you're doing 2.5. Then Jeff, maybe when he's maybe 35, 40, he's earning maybe 500,000. You're still doing 2,500. It really does not make sense. So we are able to guide you to beat inflation. Have I answered your question?
Yeah, that question is answered. Caro, I think that Anne has touched on every question here, unless maybe I've missed one.
Yes. Nyambati pamoja na kuna wale wameunmute, kindly mute. Nyambati, maybe unless you have a question. Nyambati.
Yes, sir. Hello. Hello. Can you hear me? Hello.
Okay, so I have a question. Maybe let's assume nimeanza na plan ya 2,500 and then somewhere in the way I feel that I want to add on that. I want to add on that. Is it possible or I begin a completely new plan that is going to earn maybe after the 5 years? Is it the reverse also? The reverse question also. Is it possible to reduce on that amount to begin with? So I do that one.
Yes, you can increase, you can decrease at whatever point you want to. Yes, Jeff.
Thank you.
So they are
Thank you.
not flexible, right? You can increase, you can decrease.
That equally means I can withdraw.
You can also
interest after the first year. You can withdraw some interest that was gained in the first year. On
the second year, you can start withdrawal, especially for the investment plan. You can start making partial withdrawals from the second year of 25% of your fund. So you can be able to do this on an annual basis. Every year, you get something.
25% of the cumulative fund or the interest alone? Or the principal?
It is a partial withdrawal, you do 25% of the cumulative fund.
Okay.
Okay, and there are some questions you have not picked up here on the chat.
Maybe Jackie, check on the questions.
I was saying, Carol, most of them she's touched, because we've answered Elizabeth when she was asking about the premium to pay. We've also answered the question from Job. Is it possible to invest money market without having taken an insurance policy? It's similar to what had been asked in the first question. So Anne touched based on that. We also answered the question on inflation rate in Kenya is around 6 to 7. And this product that Anne has been talking about factors in inflation every year, which she has touched based on. She's also covered the question by disadvantages of money market, that aspect of risk. Sometimes we are a bit scared to invest, but once you do, you'll always reap. Yeah. And then probability of losing investment. Anne has mentioned this question, has touched also this question. We are a strong company. We've been in the industry for quite a while. So Liberty Life, the fund managers are very knowledgeable in the industry. So we've answered this question. Maybe this one from, I don't know about cryptocurrency or Bitcoin, but I don't think we offer Bitcoin. I think that one is international. I don't think we offer that. Anne has also touched this question of Stanley Mwindi, by Stanley Mwindi, of asking, has the insurance company invested on tangible assets? That one was answered. Yeah, we answered most of these questions, Carol.
Okay, there's a question on treasury bills. I don't think that was answered.
I don't see that one.
Okay, Gerald.
Yeah.
There at the bottom. Okay. And can you please clarify more on the government bonds and treasury bills and why they are preferred to the what? To the common public stocks? And you want to answer that?
Yes. Why the government bonds and bills are more preferred? It's because they are guaranteed. Government cannot run away with your money. Government cannot go under. Government, they are very, very secure. So, and again, you realize that even when you're investing in government bonds and bills, if you go there as a private person, you are paying even the interest up front. So they are very secure. You cannot lose with the government bonds and bills. I don't know whether I've answered that question.
So I'll answer that.
Yes. Then about, is it Bitcoin or something? That one we've not ventured into. So our main counters are the 3 counters I mentioned: government bonds and bills, the equities, and the balanced fund. That's where we are mainly investing our money. Thank you, Jackie. Maybe you can also read the other questions.
Carol, there are no other questions, I guess.
I think the question on inflation, if I got the way the person who asked it clearly, he said that he's perceiving that the interest rate that you give of about 8% is comparing with the inflation of currency of 6 to 7%. So he's perceiving that it's small from the way I understand his question. But then I can I can answer that this is just an alternative of investing. If he can invest elsewhere where he can get a better percentage of return, he can do it. But this is a situation where you are weighing the risk of losing your money in an investment that you don't know the return at the end of the year. The way he asked it, it sounds like he was criticizing the interest that you give at the end of that period compared to the inflation of the shilling.
Oh. Yeah, inflation has been there. Inflation will be there. But if you don't put any money away, if you don't put any money aside, nobody is guaranteeing tomorrow will even be better. So it's better that you have the 6% return. In this case, maybe we're saying the 12% is our return, and then inflation is 6%. It is better for you to have that 6% than not having it at all. That is how I would look at it. Yeah, so Jackie, Caro.
Okay.
Nyangweso.
Yeah, maybe there is a question I asked whether when taking money market, you are also required to take an insurance. Maybe when you answered, I was not able to hear you well. Maybe you clarify on that.
Yeah, maybe what we say, Nyangweso, is that if you have enough money, if you have some maybe lump sum somewhere, you can do it by your own. But if you do not have maybe that lump sum to go into government bonds and bills, which are maybe if you want to get into, you must have 100,000 and above. So if you don't have that amount, insurance company becomes your option to help you achieve that. So I don't know whether I've answered you, Nyangweso.
Okay, it's fine. So am I able to only invest on you without taking any insurance? For example, a life insurance.
Okay, what happens with a majority of our policies, even if they are investment,
yes,
they have a life element in it because we are an insurance company. There's no you can invest with us without having what we do. So
okay.
they must have that element of life insurance, but no, it's not actually so much when it is investment.
Thank you.
Karibu.
Okay, thank you. Is there any other person with a question as we finalize?
My name is George. George Kiche. I work with both Anjeru, Margaret, and Jackie. There is a question that came up, and I wanted to support in giving clarity a bit. I don't know whether that will be okay. Whoever is moderating.
Yes, it's okay, George.
Yeah, so there's a question sorry, I joined late because I had another meeting. There is a question that one of the participants asked about inflation and about the question that was talking about investment platforms which we use. We have the money market, which is famously known as the balance fund. We have equity, which is just stocks, and then we have those that would want to do fixed asset portfolios. That is a combination of government bonds and real estate. So if you choose to, in the plan that we are proposing, if you choose to invest, because you have the option, according to how the markets are performing, you have the option to choose whether you want that fund to be put in pure equity, or you can split depending on how much you are investing, so that you can have a balance. Because
There are times when you do equity and the equity is performing better than the balance fund and you want to switch. So the company allows you to switch so that you maximize on your returns. Then another thing about losing money when you invest in our plan. Recently, the regulator passed a law that does not allow any investor to lose their money. So provided you have been in the plan, this savings plan for at least 12 months, you will not lose your money. And even if you run into problems, maybe because you lost your job or the business is not doing well, that money will remain in the account until you recover. Yeah, so currently it is not like it was before, where you are supposed to contribute for a maximum of 24 months. If you don't do 24 months, then you lose your money. But the most important thing, as Anne was saying, when your financial situations change, let your investment company know. For instance, in this case, it's Liberty Life. Let the company know your situation so that your policy can be regulated according to your situation at the moment. So those are the questions that I got when I stepped in. I don't know whether that answers the concerned participant.
I think we answered.
Yes. So there is no fear, because our regulator is the IRA, Insurance Regulatory Authority. That law has been passed and it is operational. So no one loses in an investment like the one that Anne has just projected, or I think it was Jackie, so that you invest without fearing. Then let me just add on inflation. One has the option to escalate premiums in order to fight inflation, so that if inflation is at 6% and it may increase, so for you to keep up with it as an investor, you are supposed to also upgrade your contributions every month by a percentage, not every month, every year by a percentage, so that at the point of maturity, the money that you will receive will be at par with inflation. So that is another way of fighting inflation, because inflation, as Anne was saying, will always be there. The best thing that you should do as somebody who is investing for the future, make sure that you have some money that is growing for you, for use in the future. Yeah, so we have that option. You can decide that every year you will be increasing your monthly subscriptions by 5%. So every year, at the end of every year, you know that your subscription or your savings have to go up by 5% every year, so that you fight inflation by the end or at the maturity date. Is that okay?
Yes, it's okay.
Yes.
I believe all our questions have been answered. We are 17 minutes past 3. And
all right.
I really appreciate Margaret. Thank you so much for
Carlo, before you conclude, I just want to say that this was a general presentation. It is now a need different from all of us, and our goals, just as like our goals are different. So what is best is that at the end of it all, the product should be tailor-made to suit your goals, to suit your plans. And therefore, from this general presentation, it is best that you know how to deal with you individually, so that you address your personal situation, because it will be different to what Nyagweso has, to what Dennis has. So that being the case, I would request my colleagues Anne and Jackie, and even George, our manager, to share their contact so that you can call us anytime. You already have my contact, Carlo, so that we can have, like from now it's like we deal with the individual person and their goals and their plans in life. Because needs are different. What color you want for yourself tomorrow will be different from what Nyagwesa will be needing. So it is important that we do a product that it is tailor-made for you, and then it is explained well on a individual basis. So I will request Anne, George, and Jackie to share their contacts. So for the way forward, because I know from here many will be having questions and like they don't know what to do.
That's right. That's right, Margaret. This product is tailor-made. You can't. There is no one size fits them all. They are uniquely designed for each individual. That is well said, Margaret. My contact is, if you're writing, is 0722 35 61 02. My name is George Kiche, Liberty Life.
Yeah, and I can also see Jackie as shared on the chat tab. Mine is 0721 588 543, and my name is Anne Jeru.
So feel free to call us anytime. We shall be able to expound further and to educate more now on a individual basis. Over to you, Carol, and thank you so much for the opportunity.
Yes, thank you so much. I've seen most of us have left, and I believe those who have left or those who are still here got something or two. And may God really bless you, Margaret. May God bless you, Anne. May God bless you, Jackie. And may God bless you, George. Trust me, like you've done. I don't know how to put it, but we've all learned something, especially as youths. We know how to invest, how to plan for our future, next 5 years, and I'm sure most of us will invest in money markets and maybe consult you people on Liberty and on how to do these things. I really appreciate. And please, the next any other time when we call you people, I believe you'll still respond to the call.
Thank you very much.
Yeah, thank you.
I'll forward your contacts to the main group.
Thank you all, and God bless you.
God bless you. Maybe Nyangwes can pray with us as we end.
Okay, may we pray? Our Father, who art in heaven, we thank you because of the gift of life and the opportunity that we have had to share saving and investment. How we pray that Lord may continue to guide us even as we make decisions. They may be well and enable us to be successful in this life. Thank you because of our speakers. Thank you for the guidance they have given us. And as we ponder on them, we pray that you may guide us. Continue giving us every opportunity that we need as youths. And even as we are going to rest for this night, may protect us is our prayer in Jesus'